Hey everybody, it is November 23rd.
Do you want to know where interest rates are today? We're going to cover that. Also, we're going to get into our handy dandy mortgage calculator.
That's right, we're going to go over a mortgage scenario, so stay tuned here. The 30-year fixed right now, today, is 6.25%. The 15-year fix at 5.75.
The 30-year FHA is 5.99 and the 30-year VA, 5.99.
Those interest rates are based off of these loan assumptions for conventional FHA and VA loans. Very typical scenarios, nothing crazy, nothing, where...
These aren't super rare. It's
Yeah,
not like
yeah.
a 1% hypothetical.
That's right. So take a look at those scenarios if you have questions on that. And then what we want to do is go to our mortgage calculator. I'm going to pull that up here. In the description below, there is a mortgage calculator. It's a Google Sheet. If you have a Google account or any kind of Gmail account, you can actually get a copy yourself. You just can go to File and then save a copy.
You're going to like it so much you're going to want to put it under your pillow. Trust us. All right, so let's get into it.
So what this calculator does that a lot of calculators don't do is it'll not only calculate your payments, your funds to close, but it'll also show the income to qualify. It really help. Well, again, this is not for financial advice. We're not showing you this so that it's not a pre-approval or pre-qualification, but it is giving you a very good idea for informational purposes.
Yeah, it's kind of like if you're, trying to get internet or you're trying to buy something else, it'd be nice to just know exactly what it's going to cost and what bundle you're buying. But instead, when you call, they give you all these different things and you still don't actually know how much it is. So this lays it all out. I mean, we're going to go through it right now.
So what we're going to do is today's interest rate is 6.25. Let's just put it in that scenario.
Pretty good credit score.
Yeah,
actually awesome.
All these yellow fields we're going to fill out. So let's just keep the 761 credit. How about non-mortgage debt?
Yeah, let's assume a couple credit cards and a card. So let's say $500.
How about 700?
Okay, 700.
Just in case.
You went out and maxed some credit cards, huh?
Yeah, we're just seeing higher credit cards right now. So, okay, estimated sales price. Let's say it's a very typical home here in the greater Phoenix area.
Yeah, a good starter home.
Yeah.
Good starter home. Lots of homes for more than that, but that's, with pricing coming down a little bit, that's a good number.
So we're going to do we'll stay with the 30-year fix for this. We're going to put in property taxes. What do you want to do?
Say 150.
150. Okay. And for a lot of people out there watching from other, the East Coast or some other in California, our taxes are so affordable here. So
yeah, that's right. You got to move here if you're not here, folks.
Yeah. So homeowners insurance, I'm going to put 80. Typical closing costs. Again, this is assuming this is no points. About 3,800. That's everything. Again, this is our estimate here. Prepaid taxes and insurance and interest, maybe 2,500.
Remember, that's actually prepaid. So it is part of the formula, but it's not cost. That's why it's in a different cell.
All right, so let's look at 4 different pricing scenarios. A lot of customers, and you might be looking at different pricing scenarios. Let's say you want to look at 5%, and let's just say the second is 10. I mean, maybe 20.
Okay,
and then
how about 25?
25. And then maybe you've got, let's just go even further.
Let's just say that you've sold a home and you got all this equity and you want to get your payment as low as possible.
That's right. Which is a different conversation too, because, a lot of people, they have the money for the down payment. The question is do I put it all down?
Mm-hmm.
And, again, if you want us to go through that with you, be sure to, email us and contact us. We'll be happy to help.
Yeah, every scenario is so different. So it's good to hear the whole story.
So what this does is you scroll down, the 5% down option, 20, 25, and 30 shows you right here the total payment. This is including the principal and the interest on the loan, the taxes, homeowner insurance, everything together with that mortgage insurance because it's 5% down. It's not 20. You don't have any mortgage insurance when it's 20% or more down. So $29.69 is the estimated payment for that 5% down option. 20% down would be about $24.50, around that. At $2,300 for 25% down, and 30% is about $21.69.
Okay, so look at that. The 4 different monthly payments you have, and then also we've got the income. What do you need to make, generally speaking, based upon the assumptions we have up there?
Yeah, and that was based. If you remember, we put $700 for the non-mortgage debt, and it's showing. Based off of some certain ratios we put in here, we want to see the income, or most lenders are going to want to see that income about $95,000 for that 5% down. And then if you look all the way up to 30% down, $75,000.
And remember, the non-mortgage debt doesn't include cell phone bills, utility bills. Those are just loans that would show up in your credit report.
Right. So,
all right, estimated cash to close.
You can see the trade-off, right? The trade-off is bigger payment, but less down. This is the total cash to close for everything, and then versus 28 or almost 29,000 versus 141,000. For 30% down.
Awesome.
And then you scroll down a little bit further, and you'll see that monthly payment broken down, and then a little bit further, you'll see the income column tiers. And again, I hope this is helpful. If you have a scenario that you're looking to really kind of weigh the options, be sure to reach out to us. We'll be happy to help.
Yeah, we'd love to help you, folks.
Take care, everybody.
All right, thanks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.